What we're going to talk about primarily today is about open banking, account information service providers, payment initiation, and kind of the overall perception of technology and how that can impact the credit and collections industry. So I'm honoured to sit alongside two esteemed speakers. We have Paul Hughes from Open Banking. Paul has been, an integral part of making the awareness of open banking known to the industry, and was very much involved at the outset of the open banking initiative. And then to my right, I have Olly. Olly's probably well known to a lot of us in the industry, and it's good to see a lot of familiar faces from back in the days when I was in the industry. So Olly is co-founder and CEO of OpenWrks, an award-winning fintech company dedicated to making open banking work to improve people's everyday lives. Olly's a regular speaker at industry events to do with innovation and open banking, and I'm sure that you will all know that Olly is an engineer at heart. Prior to founding OpenWrks, Olly spent his time building technology platforms to enable creditors to support their customers with debt repayments. And to everyone knows, he was part of the TDX and Lowell Group in the past. So welcome to our two speakers. So this is a panel session whereby I will be asking questions to the speakers, but equally this is an open forum. We've got Slido available to us. We're going to start with two questions as a poll, just to kind of gauge interest in the room, but please feel free to ask questions on there as well. And lastly, I am the chair, Willem Wellinghoff. I'm one of the co-founding team members of ShieldPay, which is an innovative payment service provider that has democratized escrow payments for consumers as well as legal law firms. So without further ado, I'll start off with the poll question. Who in the room has achieved or is looking to achieve AIS or PIS or access to open banking in the next 12 months? Okay. I'll give it another 5 to 10 seconds. Really? We only have 4 respondents in a big room like this? Okay, so it's a 50-50 split. That's very helpful. The second question, in terms of those, okay, are you currently applying? Good. So for those that are currently applying or have already applied, could we go to the second question then, please? What do you think open banking or through the PSD2 AIS or PIS can improve in your business? Is it customer identity verification, affordability assessments, better payment options, customer engagement, or all of the above? This is more like it. Okay, that's great. I think that shows quite clear that it's primarily aimed at affordability assessments and customer engagement, but primarily affordability assessments. Thanks for that. Just a show of hands very quickly. Who is familiar with the concept of open banking, PSD2, AIS, PIS? Okay, good. A fair few of us. Okay, good. So I think it's quite telling, and it's very convenient. It's about 9 months and 1 day since open banking went live, and that PSD2 was implemented. Paul, for you, the first question: what has been the general public perception and uptake to open banking and people using AIS and PIS?
Good morning, everybody. It's been very interesting. The journey since January the 13th has been very, very testing for us all. In terms of the public perception to the industry perception, I think the public at the moment hear about it, they see it in the news, but what they really will make the difference is when they start to see the use cases, when they start to see the products in the marketplace they can use. And in terms of that, that's about adoption. In terms of the ecosystem, where it's going, we've got, so my role at Open Bank is I'm responsible for relationship management, and I work with two guys from WeWorks through to the largest tech organisations on the world. You know, I can literally sit down one day with an exec of a bank, and the next day two guys who have got some brilliant ideas about, you know, the unbanked and trying to help people with debt. What we've found so far is that the organisations that are involved are coming up with some really smart use cases, and they're really trying to drive the adoption. But what we need is mass adoption. And what I always want to tell everybody, this is the beginning of a journey. January the 13th really was the minimum viable product. You know, these are banks for 50 years have had it all their own way. They've been forced to, through the CMA order, Competition Markets Order, been forced to open their APIs. They've opened their APIs, and I think, you know, Olly will testify to this. So far, it's been indifferent in terms of the APIs and the standards. We're working on that. We have a roadmap to put that right, and those roadmaps have different releases that have enhancements. We also recognise some of the user experiences in terms of authentication and consent models that we have within those experiences on what they should be in the marketplace. But actually, as an ecosystem, what we're tending to find is it's working really well, but we are a little hamstrung at this stage by FCA. So when you apply for your PIS or AIS regulations with the FCA, I think it was something that maybe caught them cold or they weren't ready for. So I think we've got something like 100 organisations waiting for their regulation. So for driving that user cases at the other end, we need people to help their regulation. And they're coming through and they're starting to accelerate. At one time we were getting one every 2 weeks, which clearly runs 100 is going to be a long time before the marketplace starts to have usable products. But recently we've had to sort of open up, we've had about 8 in the last couple of weeks, so they're coming through more quickly. But in terms of users for AIS, that's pretty healthy. People are starting to use that, they're enjoying that. There's some really good products out there in the marketplace that are taking advantage of that, and we're starting to get millions of data pulls, and the user experience is getting better. And that also allows us collaboration with the banks at their endpoints, and it's the likes of Olly and the TPPs, the third parties in this, that are actually testing the banks out and making the banks have a look at themselves, and they're actually helping them improve those API endpoints and that data that they pull out as well. So it's incredibly collaborative at the moment, but it's the start of a journey. And you know, when people sort of say it's not doing this, it's not doing that, they're right. There are huge gaps, but the roadmap intends to put those right, and it also intends to get the ecosystem working. Olly will find there are opportunities that we didn't see in the ecosystem that's starting to appear. So we're having third parties that banks would see as competitors or, you know, have a threat, are actually they're seeing them as opportunities to work with them and provide services. So if you're getting into that ecosystem, there's a chance to work with those banks and provide services for their customers.
Okay, great. Well, that's very helpful. Thank you, Paul. And kind of the use cases that, you know, really have primarily been seen in the AIS world is been about personal finance management and being able to switch your current accounts over very quickly. Now, in terms of the debt collection sector, Olly, where do you think creditors and debt purchasers could really use the open banking and the PSD2 framework to better service customers?
So I think there's lots of opportunity for people that are engaging with customers who are struggling financially, so looking to help those customers understand what they can afford and agree how they might repay any debts that they owe. I think the way I'd sort of break that down is what open banking enables you to do is understand the customer's transactional history and behaviour a lot better than you could before. You require that customer's consent to share that information with you, which I'm sure we'll come on to discuss. But once you have that, you have a much better feel for how a customer is actually managing their money, or for quite a few people in this room, your customers probably, who are struggling to make ends meet or struggling to manage money. So I think really in terms of use cases, a lot of people in the poll said they felt the opportunity was in affordability. That's certainly what we're seeing. So our clients effectively who use our platform and our toolkit, a lot of the use cases are focused around understanding what someone can afford, whether that's understanding whether someone can afford a mortgage that they're applying for or a personal loan, or whether it is into a stage of arrears or debt when someone's trying to understand what a customer could afford to repay each month. So I think everything really comes back to having a better understanding of that customer. I think if we actually sort of move that into the payments capability that open banking provides, so for people who don't know, I guess at the highest level, the spirit of open banking and what the technology enables you to do is enable a customer to directly from their bank account instruct a payment without any need for an intermediary party such as a merchant acquirer or payment processor in between that transaction. So to try and kind of articulate how open banking could be used to change a collections experience for a customer, we're sort of, this starts with theory, but we're starting to put it into practice with some of our clients. In theory, you could assess a customer's income and expenditure and their affordability certainly within 5 minutes, and I'd expect to be able to get that down to a few minutes. And you can do that in a much more accurate way. I think one of the plenary panels earlier were talking about, the FCA in fact was saying that they've seen some firms in this market start to use technology to enable people to fill in income and expenditure forms online. I think that's a step backwards personally, because that is fraught with self-certified error. The best example of why you shouldn't rely too much on self-certification is the recent or not so recent financial crisis. So it's a 10-year anniversary of that as well. That was ultimately caused by people self-certifying for mortgages, and affordability as it happened. So I think what open banking lets you do is remove some of the friction and make it easier for people to understand their affordability, but do that in a certified way by understanding what they're actually spending and what their income actually is. So we could see this deliver a world where customers can easily understand what they can afford, and then with the payments capability, actually look at repaying slightly differently. So I think one of the big challenges for consumers who do fall into a position of debt is that they probably have variable income and then very fixed expenses. And indeed, the market today, even if you agree a repayment plan, typically that's a fixed amount every month. So what happens in the months where you don't earn as much as you'd planned or expected, or you have an unexpected piece of expenditure, you then struggle to keep up with that fixed repayments. So with open banking, you have the ability to, one, understand someone's affordability in terms of what's actually happening, what they're actually spending money on, and what their income actually is. And then with payments, potentially flexibly change the way someone would repay. So why don't we let consumers repay a percentage of what they can actually afford rather than asking them to repay a fixed amount every month? And then I guess the third phase of that would then be to help customers understand more about the impact of their behaviour with money. So if they're spending money in particular areas that they might be able to adjust to enable them to repay faster and reduce debt burden and reduce the cost of being in debt, then open banking, the data it affords and the way you can engage with the customer could help you do that. That was probably a long answer, but probably three main pieces, which is understand more about customers' affordability, think about how you might be able to help them repay, and then think about how you may be able to help them change behaviour to actually mitigate debt.
Thanks. Again, very, very helpful and very useful. I mean, in terms of the competitive landscape, I've heard the notion that, getting access to open banking and going down the AIS or PIS route, it creates a competitive advantage to companies, especially when you're already in the traditional financial services sector. In terms of, we saw earlier, the primary use case is for affordability assessments, but the second one was also better customer engagement. And we've seen emerging technologies, like I mentioned earlier, the personal finance management, like a Squirrel, or even using OpenWrks to better assess your financial capability. In terms of the traditional debt purchase and debt collection sector, and equally the lending sector, how do you think companies in those sectors can look at open banking and gaining access to the PSD2 framework as a competitive advantage, and really, getting customers to understand and take better informed decisions. How do you think that plays out to build a more competitive advantage?
So I think I'll probably try and answer for assuming I sort of understand a bit about the audience. So how would let's say a contingent debt collection agency use open banking to increase their competitive edge, and then how might a debt purchaser potentially do that? I think for DCAs, unless the market's changed a lot since I moved on from it, I think the competitiveness of the market, or the competitive levers, are my ability to contact a customer, my ability to understand and engage with that customer, to understand their affordability, and to be able to do all of that as cost effectively as possible. So I guess it comes back to my first kind of comments around, I think there's a competitive advantage opportunity from one, understanding more about the customer and their situation, so that how you're helping them manage that problem or that debt is better understood. So again, I guess for a debt collection agency, you want people to be engaging with you, being able to set up some kind of payment plan they believe in. They want to believe that they can meet those repayments. They want to believe that that's actually going to contribute them to ultimately them clearing the debt that they owe. And so again, back to understanding more about the customer, understanding more about their affordability. And then I guess, again, part of the plenary discussion was around use of technology. If you're doing that through a digital channel, which won't necessarily suit every customer, but certainly an increasing proportion of customers who would like to serve digitally, then if you get that right, then the cost of doing that can be reduced. You potentially become more competitive because you're more attractive from a cost perspective. But again, coming back to affordability, I think the key bit to stand out or have a competitive advantage is ultimately good for the consumer, getting them into plans that they can afford to repay. If people can afford the plans, they'll stick to those plans, they'll see them through, and you'll ultimately earn more commission and you'll be more competitive. I think in the debt purchase space, similar logic applies and similar opportunity applies in terms of how do you become more and more cost effective engaging with the customer. What's really interesting for debt purchases is where they've become the true creditor, and I think as Peter was saying earlier, and someone from PayPlan as well, that creditors are becoming, debt purchasers are becoming sort of the largest creditor that consumers have. You can actually change your relationship using some of this capability with your customer. So it can change from being quite transactional to look to set up a plan and repay into this area of actually how are you helping the customer understand their ongoing affordability? How might you be able to help them adapt their behaviour or adapt their repayment schedule to deal with shocks in their finances, unknown expenses, loss of job, or just variable income? So I think, again, the competitiveness will come down to the core metrics that drive all your businesses anyway, which is getting in contact with customers, engaging with them and helping them repay. I just think this information gives you a much better chance of doing that, combining it with the technology, hopefully in a more cost-effective way.
Can I just add, what I've seen as well is more at the front end in terms of we see some really good use cases around money management, getting people used to looking at what they've got, having visibility. And I think open banking allows that with the aggregation. So somebody can have an app in that world where everything is on it, so they can see what they have in a real time. Typically people are blind to when a statement lands on their doorstep still in that paper world and have to go out and do it. And if we can use either through the agencies or companies or commercial agencies, if we can get people to have these apps and see it so they can see the whole of their payment world and everything they're responsible for. I've seen some really good examples of that helping people to stop them getting into these positions and to make them aware of what they're doing. And open banking allows you to do that because it not only pulls in your banking account detail, but it will be pulling in card detail as we go forward as well. So you can start to look at it. And also, as well as being an opportunity to do that, there are opportunities for people then to offer them better value services in that as well. Because quite often people habitually stick with the service, whether it's the best value or not. We're seeing the comparisons, and it shouldn't all be about selling. I think the selling benefit should be that the customer gets the best deal, and see these. So we see some of the account sweeping sort of models for overdrafts as well. That allow that, you can see somebody's got an overdraft. Instead of using the overdraft because it costs a lot of money daily to have an overdraft, organisations are offering that they will fund the overdraft for that period of time till you come out of it. Then they take the money back out again, so you don't get £10 daily fees, and they all start to rack up in the background. So there's lots of things going around that could really help the back end at the front end, and to me that's interesting to everybody. If you're the HM Treasury and all these guys, that's what they want to see. How are we helping them? It's all very good that we can go after them, but what else can we do to stop them getting in trouble in the first place?
Yeah. The open banking framework, to those that don't know, primarily was as a result of the CMA order and applies to only what they call the CMA 9, which are the 9 biggest banks in the UK. But we've seen a large number of other financial institutions adopting the open banking framework to allow for other services, like Monzo is a key example of that, and using some of their features to better plan and manage their financial circumstances. So in terms of gaining access to open banking and at the same time the FCA applications, can you just take us through the journey and really kind of what it takes? Because there are some people that are thinking about it or not quite sure yet. What is actually the bar to entry, and secondly, what is the process?
So I spend a lot of time with organisations that are looking to apply for AIS or PIS services, and from an open banking standard, it's something we have to be careful of. So the FCA piece, in essence, it's not really for us to tell them what to do, but what we do is say, have a look at the approach document, think about what your business model is, see if it fits, and you think your model will allow you access to AIS or PIS services. From our point of view, because this sounds a terrible thing, but it's a bit Darwinian. You think at the end of the day, what we're doing is that regulation allows you access to people's account information and payment services. So there has to be a level of an organisation that's sort of not only fit and proper, but has the access, and that's down to the FCA. And again, I wish the FCA was in my control, because it's the block that we have getting them through. But from an open banking point of view, it's quite straightforward. You either through me, I can introduce you to organisations, or through the website you go through, you enrol, and anybody can do that for that enrolment at this stage. You enrol, and we do identification and verification checks on your identity as an organisation, then individuals that you then present to make sure that you're fit and proper and you are who you say you are. And once that's done, ahead of your regulation, if you're applying for your regulation, what that allows you to do is access to testing environment, a sandbox testing environment. So there's a couple of model banks, so they can start to test their API endpoints against their product to see what they will encounter when they go live in the ecosystem. And we've got but there's 150 people at Open Banking, and we've got a year and a half of learning. We've got 9 months of go live learning. We actually work very hard with these organisations to buddy up with the banks in the ecosystem and the other organisations to help them. So we're very helpful. We will support them, and again, we try and be as agnostic as we can. So if you're two guys in the WeWorks, absolutely, we want to help you. But the websites are really good. I wouldn't have told you to go there before because it was appalling. It's improved a lot recently. I couldn't find my way around it, and I knew what I was looking for. If you go to the website, there's absolute support there, or contact us and we'll take you through that. But in terms of barrier to entry, the FCA piece depends on your model, and there are very different models, and unfortunately we're excluded from giving any advice on that piece as well. But I would say the only advice the FCA have given us that we can hand on, which is kind of them, is that the organisations that have used a third party, a law firm or a specialist FCA applications organisation, they tend to not necessarily be more successful, but they have a faster process because they're used to doing it. And at the moment, for anyone that's applying, originally the timescales were it was 3 months from when your application, what they consider a complete application. So when they've stopped asking you questions, 3 months to you get your regulation, and probably a month to get a case officer. It actually is more like 2 months to get a case officer, 6 months, even though it's accelerated recently. But we can help you through all of our side and just point you in the right direction.
Just to pick up quickly on the FCA piece, so we got our authorization on the 13th of January, which was good because that was the day it went live, so just in time. I think the key bit, as Paul mentioned, is actually clarity of business plan. So you guys all know, most of you are probably running, working for, operating in FCA regulated environments and companies. The key piece is they want to understand what your business model is. They want to understand why you're accessing customer data. To do my with no apology sales pitch, at OpenWrks, what we effectively help you do is get started with open banking and start building products without the need to be regulated. So how we do that is we're a regulated firm, and we provide both the technologies but also the regulatory umbrella to help you start using open banking and start building open banking services. So we can have clients live with customers connecting to new services within days using our technologies. There's a few things we do that ties back to the onboarding process. One is remove that need to get authorized when you don't quite know what your business model is. So come and work on business models that we've already built, or test out your own in our labs that we've built. And then from a technology perspective, rather than having to, once you've got through that barrier of authorization, build against what is 9 banks today, but it's actually about 40 because of different brands. Within, if you think about RBS and Lloyds, we just have one endpoint, if you want to get technical, from an API perspective, but just one format and one set of information you need to develop against. So anyway, I think just on the FCA piece, absolute clarity of business model, which is hard because to a certain extent you might not know what your business model is in the context of open banking until you've tried it out to see whether it's going to work. So that's certainly where we've been able to help most of our clients so far.
Can I just add, Ollie's absolutely right in terms of that's the difficulty that you have. It is a real chicken and egg, but I don't know. I've had 2 FCA regulated businesses. It is at the point of application that this needs all to be in place. So that's why we try and provide as much testing environment for you to at least start looking at the potential use cases that you take from there as well. But also, Ollie's absolutely right. You don't have to do it directly. And as open banking, you can go and take our API standards publicly. You don't have to come through us and do what you want with them. They're there, they're available. But actually, enrolling with open banking, go through our process, gives you a lot of support. But also at the same time, there are people in the ecosystem that can do that work for you. So don't think you have to do it yourselves. You should have a chat with Ollie if you want to do that. And there are, again, we don't recommend, but Ollie's very active in this space. But there are ways to do it. Think about your model, and then you just think about who can support you. And there's some fantastic. We don't care as long as you use it some way through the open banking standard. It doesn't have to come directly. It's just as important to us that lights of Ollie support you.
And just to follow up on that, we're a payment services institution that is looking at applying or has applied for AIS and PIS to add to our additional risk functions and availability for funding for customers. And PIS, we've kind of primarily talked about AIS, but PIS is a payment initiation where the customer gives you consent to pull funds direct from your bank account. Through a very secure authentication method, rather than the customer having to push funds through their banking app to you. And I know that there is a lot more going on in terms of getting that standard, and the PIS widely adopted because it's been a very slow uptake. But like you said, it's an ongoing thing. It's very young. But our approach to it has been, and I couldn't recommend Paul's words enough, is the FCA put out a very, very useful document called the Approach to Payment Services Directive which and the Payment Services Regulations, which actually from their viewpoint says this is how we perceive firms to actually go and obtain authorization, or these are the kind of things you need to think about. What are the customer authentication pieces you need to think about? And it's an immensely helpful document, and was recently updated just before the summer. So if you are looking at getting permission for AIS or PIS, or even a wider PSD2 or Payment Services Regulatory Permission, consult that document first. then of course, if you want to go and seek a consultant or whatever, do that. But that is a great document to start off with. So the important thing we talked about is allowing customers to be more educated, or I know that the word is frowned upon, but more aware of their financial circumstances. There are a lot more benefits to open banking in terms of sharing data, but you mentioned the kind of Darwinist state. That access to data may cause a little bit of concern to consumers. So there are provisions within the regulations, and again, the approach document and PSD2, that the customer has to provide explicit consent before sharing that information. From, I think, Olly, more from the kind of practical view, and Paul, kind of your perception from an open banking view, how do you perceive the risks or the uptake from the customer from an explicit consent perspective? Let's not talk about GDPR because it's separate in that sense, but what do you think are the risks or the barriers that explicit consent might actually give to these companies to build that competitive advantage, especially in the debt collection sector?
Yeah, so I think I was going to mention GDPR, but you said I can't.
Go ahead if you want to, yeah.
Well, I guess it comes into consent. So I think the really good thing about a lot of the work that's gone into the standards from open banking implementation entity in the UK is around customer consent, customer authorization, and customer authentication. So authentication, identifying that customer is the person who owns that bank account and has the right to access it, and the authorization in terms of what data they're willing to share. So the standard sets out some very clear rules and approaches which are supported by the regulator, both on how you seek consent from the customer and the customer's right to control their consent. So consent for how long they want to share their data, who they're sharing it with, and what elements of data they're sharing. So they don't have to they're not consenting necessarily to give full access and free reign across their bank accounts. They can give consent to share specific information from their bank account for a period of time, which could be for seconds, just for a decision, or could be ongoing to have insight and help them be more aware of their finances. And so there's a lot of controls there that protect customers. I think, having said all of that, there's obviously a challenge, which is you are asking customers to share information with you, and it is confidential information, and people have a interesting relationship with their money, and they tend to be quite private about it. And so I guess then, in terms of a barrier, from a security perspective, I won't go into the details, but there's lots of standards as well around the level of security. Consumers are not asked and do not need to share any of their credentials to their bank accounts to use open banking or to share information through that mechanism. I think the big barrier is the value exchange. So as a consumer, and in a now GDPR world, why would I share information with anyone? And I'd only want to share my information if I get a benefit in return for that. So the key thing when you start to think about how you might use this information to improve your competitiveness or improve your customer experiences is, what am I giving back to the customer in exchange for having this very privileged access to a lot of information? Now, for me, that comes back to one of the earlier points around public perception and public adoption, which is comes back to another plenary discussion on simplicity. Consumers and our customers don't care about open banking. They don't know what it is. They don't need to know what it is, and they don't need to understand it. What they care about is things like finding out if they're going to get the mortgage they want to buy the house that they've got their eye on, finding out if they're going to be approved for car finance for the car that they need to take the kids to school, and maybe in the context of debt, finding out whether they can actually afford to meet the repayment they're being asked to make. So I think the key bit in terms of the barrier is thinking through, thinking about the opportunity with open banking not being a technical thing, not even being a security thing, but being a value exchange with your customers and part of the customer experience. So what is it, the benefit that you're going to deliver to your customers in exchange for them sharing a lot of information with you? And you do that today. A lot of you are increasingly using services and data from credit bureaus to understand potentially affordability and people's credit worthiness. It's an extension of that, and yes, it's more information, but the key thing is, what am I delivering as a benefit to the customer, and framing it in that. So when asking for access to someone's bank account, it's quite a big ask. So again, make sure it's very simply and clear to them why they would do that and what the benefit is.
What's interesting as well is if you look at that, it's explicit, and I said not mentioned about the FCA and the approach, that there has to be a benefit to the customer to have access to their information. You can't just say, there have been people declined for services for AIS and certainly for PIS because they thought, wouldn't it be good if we could see all their transactions? Imagine what we could do with that, and then didn't really articulate well enough to the FCA why they'd want to see that, apart from they could use it for their own benefit. So within that process of looking at the document, the FCA, it's got to be clear the reward, there must be a benefit to the customer to be able to take advantage of that. And Ollie's absolutely right. That's what it's about. The customer is front and centre around this. From an open banking, we invest a huge amount of money on consumer groups and organisations that we sit with and work with to work these things through. So it is absolutely key that the customer comes front and centre of all this as well, and they do within all the standards. We make sure it's the customer first.
Thank you. I'm just conscious of time. We've got 2 minutes left. Are there any questions from the floor? Okay. Let me just. Okay.
Hi, Steve Murray from Arden Credit Services. Just in the context of the last couple of comments about what's in it for the customer, in the context of an income and expenditure for a DCR or debt purchaser, what is the carrot that we can give to a customer to say, give me access to your accounts so I can do 100% accurate income and expenditure on you? Because I don't know about the rest of the people in the room, you're probably looking at low percentage of people who actually want to give you a 100% accurate income and expenditure. There's always going to be a little bit of holding information back because they may not want to pay you exactly what they can afford. So what would we be giving to the customer in exchange for that information?
It's a great question. I think there's probably there's a few things. I'll come back to your point about disclosure and whether people would be comfortable telling the truth, because I think that's ultimately what you're sort of saying. I think part of it, yeah. I think one of it is saving time, and I think in your collections, sort of at the hard edge of someone looking to repay debt, that probably won't be enough. So in applications like making a loan application up front, you can see how where you need to do income and expenditure assessment, time and friction's a big barrier. If I can give you a decision in 5 minutes, not 5 days, that's great for the customer. Typically people want that. I think where it needs to be more than time, and there's a risk, customers perceive a risk that if they fully disclose, that may mean they need to repay more. I think this is absolutely a key place that the market's starting to change and needs to change. I think if you look at the way the regulator looks at this market and the way increasingly consumer action groups are, and I think actually everyone, including the people looking to collect money from the customer, it's in everyone's interest to have a true picture of someone's circumstances. So one of the benefits to a customer who is genuinely looking to tackle the problem is that by having a more accurate picture, I can make sure, to my point earlier, what you're agreeing to repay, you're actually going to be able to afford. So it's not you looking to clear down fast, looking to set up a payment plan to get people off your back. It is actually, after I take care of your priority bills and key expenses for your life, you could afford this amount of money. I think the piece around whether customers are comfortable sharing that, where they may feel that results in more repayment, I think is where collectively as an industry and an ecosystem, we need to sort of build trust with customers that actually the true view of their circumstances comes up with the right answer for them and the right answer for their creditor and the right answer for the person in between trying to solve that.
Okay, thanks, Ollie. Unfortunately, that's all the time we've got for this session. What we'll do is we'll take these questions away and I'll circulate them to Ollie and Paul and see if we can share our answers with the CSA as part of a piece on this. But in terms of the content, I hope this was very useful. please feel free to speak to us after this session or at lunchtime. I'm sure that we'll be here. If you would kindly like to make yourself available to the next session, whether it's next door or remain seated for the next tech session here. Many thanks.